Good evening, guys. It is Wednesday, April 23rd, 2025. This bathrobe business. I got my coffee and I got the news. Interesting day on the market today. Let's go to the numbers right now. It was a lot of volatility. When the market first opened, it was up about 1,000 points. And then steadily it began to fizzle. By the end of the day, it did end up being about 400, up about 400 points in the Dow Jones, but not as strong of a rally as it was at the beginning of the day. I shared with you guys my stock portfolio yesterday. I should say my trading portfolio. That's where I just normally just trade stocks routinely. I've shared a few trades with you guys over the years. I did sell. If I had sold at that absolute peak in the morning, I would have had an extra 2 grand. I'm not gonna lie, I'm a little upset that I didn't. But hey, I still made money. This market volatility has been great because you could literally buy any Dow Jones company when the market's down 1,000 points, and then the next day sell it and make a few bucks. It's nothing opulent, but you can make money off of it, and so I did. I am actually still holding on to Bath and Body Works and to Google. As you know, I am a huge proponent of Bath and Body Works. I think that company is so underrated. It's given me return after return over the last 6 to 8 months. I started coming in and out of it back in probably September or October when I shared that with you guys. And routinely, I've made money on it. And I think like it keeps getting devalued and underestimated in the market, and then it delivers fantastic performance and then rallies back up. So I am still in Bath and Body Works, and I'm in Google until tomorrow. So no, I lie, until technically Friday. So Google will report earnings after the bell. So I won't have an opportunity to buy or sell, do anything with Google until Friday morning. But I still expect Google to be up. I think they're mainly going to grow through advertising revenue. I kind of shared with you guys a couple weeks ago that strategy of why I think Google is going to have fantastic returns. Now, fantastic returns do not mean that the stock is going to do what we expect. As we'll see with a couple of stories today, there were a lot of stocks that performed very well in the last round of earnings. A lot of tech stocks, including NVIDIA, Facebook, all of them, Meta, they all had fairly good earnings, but just because there was a more dimmed outlook or revenue didn't grow at the same pace as it did the year before, it was deemed unworthy, and the stock price still dropped. So we'll see. I'm still betting on the fact that Google will have a good return this quarter because I think their advertising revenue is going to be up, as I've shared with you guys. Now that I'm always on YouTube, but like never before, I'm seeing ad after ad after ad, usually every 6 minutes or so, which I've not seen before, which makes me think they're upping their advertising game. So another number I'd like to share with you guys in regards to the market is gold. So gold is down right now, as you would expect. So gold fell to about 33.50. Let's see where it actually was today at its lowest. So at one point, gold today was at about 33, 34. Looks like that was no, I lie. I'm sorry. At one point today it was at 32.76. Damn, that's a fantastic number. So do I change my opinion on gold? No. I still think gold is a huge buy. I would use this regress to buy it the same way I bought up all those stocks the other day when the market plunged, and then I sold them just today. Buy gold, except this is long term. Gold is, like I said, it already hit the 3,500 mark that I was predicting just last week. What was that on? No, not last week. Monday. What am I saying last week? It was on Monday that it hit 3,500. And I still say it's going to be at 5,000 by the end of the year. The inflation is baked into this entire economy. It doesn't matter if it's Trump at the head of it. It doesn't matter if it's Harris or Biden or insert name here. The United States is just built on debt, and we're not reversing that. Despite all the promises of cutting budgets and cutting spending and Doge and this and that, nothing has happened. They literally passed the budget a couple weeks after all the big Doge moves that just refunded everything they cut. I still don't understand that. The only representative, Thomas Massey, that had any opposition to Trump was threatened with being primaried. It makes no sense. And also Bassett. Was that his name? No, not Bassett. I'm sorry, not the Treasury. Hegseth. Hegseth came out, the defense secretary, recently and said, we're going to have $1 trillion defense budget. I don't know why that's a good thing, but that definitely shows you that they're not cutting spending by any amount that's going to have any effect on the inflation numbers. There's another thing I will also underpin as to why I think we're going to see rising gold prices. One, of course, BRICS and Russia, China, Iran are heavily backed by gold right now. And that will be an asterisk there. There is a lot of gold involvement in BRICS. We'll just leave it at that. We're not going to dive into that can of worms. But also, it doesn't seem like the United States is really trying to close any of its trade deficits. It's just shifting them. It's shifting from places like China into places like Vietnam, Malaysia, Mexico. That shift is happening one way or another. It doesn't really matter who's at the top of it. Oftentimes, it feels like I may be attacking Trump too heavily on this because this is a trend that started really as a deglobalization move with the start of Brexit back in 2015. So this has been a global movement to shift global trading patterns for about 10 years now. And with all the talk of, Trump is so aggressive towards China, Biden wasn't any less aggressive. In fact, you could make the argument that Biden was more aggressive, seeing as how he had been in the system his entire life. He knew how to manipulate it. He strengthened a lot of the tariffs that Trump had just put in as executive orders. He made them more of policy changes. He kind of defanged the World Trade Organization, so they can't really do anything against the United States. This has been a movement. Oh, and trade shifted heavily under the Biden administration, where we had a larger trade deficit with Mexico for the first time in history than we did with China. So this is a trend that's going to continue. Now, why I bring this up? Whenever you have trade deficits, you're going to have debt. That's not an absolute, but it kind of is. It's the reason is if you are buying more of another country's products than they are buying of yours, they are going to have more dollars on hand. And so, if in that scenario, every country in the world that has a trade deficit is just going to print more money. And you can say, oh, it's not printing, it's quantitative easing, it's issuing of bonds, et cetera. It doesn't matter. It's printing of money. And that gets sent overseas in one form or another because we are buying their products and we pay them with American dollars. So that money goes overseas. If all we're doing is shifting trade deficits from one country to another, it kind of bakes into the fact that it doesn't really matter. We're still going to be printing dollars, and that's kind of baked into the system. So that's why I still say, no matter what, buy gold now because it's going to be 5,000 at the end of the decade. What happens after 2030, I don't know yet, but I think for certain, gold is going to be up to about 5,000, and many other people are making the same call as well. Finally, mainstream news outlets are talking about it. Bloomberg's talking about it. Fox Business is talking about it. Forbes, I think, was talking about it. Goldman was talking about it last year. They were early to it, but I was earlier. So, also, if you, and I guess you wouldn't call him an economist, but he's a financial commentator out of England, whose name escapes me. Oh, I want to say it's Mike Winnett, but it's not that. But why can I not remember his name? Okay, but anyway, he talks a lot about it. I really like some of the market information that he gives out of England. I cannot believe I cannot remember his name right now, but he has been long on gold since 2020, which is a great time to enter. So yeah, gold is going to go up one way or another. Okay, enough of that rant. Let's jump into the news stories of the day. So very interesting stuff happening. I may end up eating my own words on the economy heading towards recession. There's a good chance it might actually not be, despite everything. So the first I will mention an anecdote, and then I'll jump into the news stories. So today at one point, because of work, I had to go to Home Depot in the middle of the day. It's Wednesday. It is 12 o'clock on a Wednesday afternoon, and Home Depot was packed, like packed, like weekend packed. And I thought that was very weird. I have not seen that before. Now, when you, granted, I'm not at Home Depot on most weekdays. If I go to Home Depot, it's usually on the weekend. But I'm assuming that if I'm seeing this kind of trajectory during the week, I'm probably going to see an even higher trajectory on the weekends. So for one, I think Home Depot might be a buy. But two, I think that shows strength in consumer spending. Now, this leads to the first major story. Consumer spending is up in a big way in April. Now, this article makes a very stupid point about it. This article is, you can clearly see, is written by an economist. Look, I'm a nerd, but every time I see an article like this, I just want to call the writer a dork because it's such a stupid way of framing the argument. So consumer spending is up, and the writer of this article has no idea why, but they're saying, oh, people are buying more stuff because Trump's tariffs are going to raise prices. So they're trying to buy as much stuff now before the price goes up. That sounds good on paper. That sounds good in a math equation. But that's not how any human being on the face of the planet makes a purchase. Like I follow these tariffs on a daily basis, and I don't base my consumer purchases on tariffs whatsoever. You can make the argument at the fringes, maybe somebody in regards to a major purchase like a home, a car, perhaps appliances, but there's suppliers that could take this into effect, but not consumers. No consumer on earth purchases that way. And I think this is funny because this is a classic example of economists not understanding how people actually spend money. At least good economists understand that. Bad economists don't. Bad economists use these stupid formulas and think they're being smart and deductive. Good economists actually invest money into the market and understand that when consumer spending is up, it has nothing to do with tariffs. It has to do with consumer spending. So that is actually very positive news for the economy. In addition, Capital One also had some more story in which it says U.S. consumers are in good shape. It talks about worrying signs, but it's also, I think,
Optimism isn't sunshine.
Aren't worth mentioning. Sorry, whenever I go on to Fox Business, they always want to open the stupid little video. Yeah, consumer debt is rising, but consumer debt's always rising. So very strong economic data from there. Now, in addition, the tech sector might be in better shape than we anticipated as well. IBM reported fantastic earnings. They reported 14.54 billion per earnings versus the expected 14.4, and earnings per share of 160 versus an expected 140. So fantastic performance. Now, remember, IBM is not heavy into AI. This is kind of your traditional bread and butter technology, and it's doing fantastic. Now, at the same time, on the other side of the spectrum, this is a company I've talked about before, but I never really follow in close depth. But it's SK Hynix. It's a South Korean company. They help manufacture some of the parts that go into NVIDIA AI chips. Remember, NVIDIA doesn't actually manufacture their own. They create the infrastructure and the technology behind it, but they farm out to other suppliers like TSMC and SK Hynix to manufacture. They're up as well. They had fantastic earnings. They came in at 4.4 trillion won. This is in South Korean currency versus an anticipated 6.62, and revenues grew to 17.64 trillion versus 17.26 estimated. So fantastic growth. There was a bit of a slowdown in trajectory versus last year, but overall fantastic growth. And remember, this is for the first quarter. Half of the first quarter was kind of under the cloud of tariffs. So despite that, in regards to all that trauma, the stock still grew fantastically well. So the tech sector is actually probably better than expected. This is why I think Google is going to have good returns tomorrow. So I think the economy is showing strength in a lot of sectors. Now, those were all the pros. Here are the cons. Chipotle is seeing a slowdown in consumer spending in 2025 as it gets off to a rough start. It's not the first restaurant we've talked about that's seeing this downturn. Simultaneously, Alaskan Airlines is seeing a slowdown in second quarter profits, seeing a slowdown in demand, and second quarter profit outlook falls short. So they came in a little bit under estimates with 13.14 billion versus an estimated 13.17, and only 70 cents per share growth per share versus an expected loss of 75. So they are also seeing kind of a downturn. In addition, despite that fact, I would still say that this is a detriment to the economy. Despite everything we're seeing in the negativity, U.S. home prices still ticked up 0.2% in March. Now, it's the slowest increase since 2022, but it's still an increase. And that's kind of worrying, that despite the fact that we're seeing kind of all this economic pressure, it's driving down the cost of a lot of assets, specifically in the stock market. Housing prices are still going up. I guess you could frame it differently and say that Wall Street, that's the difference between Wall Street and Main Street. That this shows that Main Street is doing strong, especially with consumer spending being high, credit card debt being high, etc., and tech sector is doing very well. That maybe this is a disassociation of Wall Street from Main Street, maybe. But I was hoping for better economic outlook. We would see prices tick down, because if this doesn't make prices tick down, what does? Especially since I should also mention that weekly mortgage demand is actually at some of the lowest levels we've seen in a while. It's down nearly 13%. The cost for a 30-year mortgage on most single-family homes is 6.9%. That's up from 6.81 last week. So we're facing powerful economic pressure. We're facing tariffs. We're facing high interest rates. And despite all that, housing still isn't falling. So I guess you could bank on the fact that housing prices are still going to go up, as any asset will in a rising interest rate inflationary market. But it is just kind of crazy that even despite all that, it's still not falling. So those are the stories of the day. So kind of a mixed economic outlook. I am becoming more cautiously optimistic based on some of this anecdotal evidence that I've just witnessed today. And so we'll see what happens in the next coming weeks. We're going to be entering we're already partly into earnings season, but more and more earnings are going to be coming out for a lot of these companies. Google, I'm very interested in what happens tomorrow because I'm financially invested, but we'll see what else happens with other companies as some of these earnings start to come out for the first quarter. That's pretty much it. So those are the stories of the day. I will see you guys back here tomorrow, and I hope you have a productive Thursday.